In America and UK, it's very fast. Boom, 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 boom. Let's make a business deal. Boom. They already have a feeling if they want to work. And I would say I hear from a lot of investors globally. They admire America because a lot of people and entrepreneurs are not afraid to fail.
Hey, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. And today we're talking with Daniel Nikic out of Dubai right now. He's actually an expert in the Middle Eastern and European markets when it comes to deal analysis, private markets, understanding how you build a company that people want to invest in, and checking all the boxes that are necessary for raising capital, as well as doing your own analysis as an investor. So really enjoyed this conversation. I think you will too, especially learning the nuances of dealing with different cultures internationally when raising capital. Thanks.
Welcome to Angels, Exits, and Acquisitions, the place to learn how to fund, scale, exit, and massively profit as an angel investor or entrepreneur. Brought to you by the Angel Investors Network. And now, here's your host, Jeff Barnes.
Okay, welcome back to another episode of Angels, Exits, and Acquisitions. I'm your host, Jeff Barnes. I'm here today with Daniel Nikic. Daniel, how are you doing today?
I'm doing great. Thanks, Jeff, for having me. How are you doing?
I'm doing well, doing well. I know you're over in Dubai, opposite side of the world, and get a little bit later in the evening there, but I really appreciate having you on here and being on the show. So, I'm really looking forward to talking to you about investment analysis and how companies can get ready to raise capital and ready to find investors. But before we do that, why don't you tell folks a little bit about your background and how you got to where you are today?
Sure. So originally I'm from Canada, born and raised, and I moved to Croatia in 2009 after I finished university. And my background was initially in market research and financial analysis. I worked in commercial real estate, but I always had a passion for entrepreneurship. And I always found it quite fond that someone could start a business because it's a huge risk. It's all on you. You can't really blame anyone. So if you screw up or fail, it's on you. But it's also interesting to see people's success stories who have built, I would say, multinational corporations. And I started my own company called COHRES in 2014, which was focused on market research and financial analysis. And I pivoted towards investment research, in which I help investors make investment decisions from scouting all the way to due diligence. So in other words, I do all the grunt work so an investor can make a decision to invest in a company or not.
And you've been doing this for a lot of companies. It says over 15,000 companies you've helped analyze. So I'm assuming you have a little bit of software that helps you out in some of these things, right?
Yes, I use software. I also use, I sometimes go old school, Excel. And pretty much when analyzing, I think a company, you still need a face-to-face interaction or listen to what they're really selling.
Right. Yeah, absolutely. And, investment analysis is one of those things that, you know, how do I put this? There's an art and a science to it, right? Because there's a lot of things that are very nuts and bolts. If you don't have this, you don't really have a business. You're probably not going to be able to grow the business. Then you have projections, which most people, it's pie in the sky. They lick their fingers, stick it in the air, and like hopefully we'll figure it out. And then there's the team aspect and the intangibles. Like, do they have the motivation, the desire, the perseverance? Have they done this before? Things like that. So when you're analyzing companies and you're also helping these companies get ready to raise capital, what are some of the things you're guiding them through to help, not just with the science aspect of it, but the art of raising capital and analyzing the deal properly?
Great question. So let's just say, for example, I'm analyzing a company in a pipeline for an investor. I always say to them, look at the investor's perspective. Why should they invest in you? So you have to know your market. You have to have a solution to a good problem. And you have to make sure you know your finance, especially because they're giving you money. It's not free. And I think some people have the wrong perceptions about investors or VCs because a lot of venture capital funds, they're getting money from either pension funds, family officers, and also high net worth individuals. So they have a liability to their investors. So it's a domino effect. And one thing I would always say is be prepared for any questions. So prepare, kind of like devil's advocate. Be prepared to someone to always go the opposite of what you're trying to sell. So you could say, oh, I have this experience this way. And what? Why should we go with you? And a lot of time I hear from investors, they want to invest in startups in the team that they like. Or you have to be passionate. How can you deal with problems? Because as you know, for entrepreneurs, they're going to have to go with highs and lows. Can you get over the barriers? Can you deal with problems that can possibly make you go bankrupt? You have to be able to deal with those big problems. And one thing I would say is, can you manage stress? Because you're going to have to deal with stress as an entrepreneur. How are you going to deal with it? If you deal with one big stressful situation, will it kill your motivation or your discipline to continue going on? So I would say it depends also on the stage too. So if it's early stage, you really have to have a good idea. What's the problem? What's the solution? What's the gap in the market? You have to know the market. But in other stages, it's going to be like, what's your pipeline? If you're already, I would say Series A or post seed, what's your pipeline? What are you going to use the potential investment monies for? And later stages, how are you going to exit? Because a lot of times I see even, I would say pre-revenue, do you want to exit? Because
Mhm.
an investor, they want to return on their investment. Or they're going to probably sell, or do you want an investor to help you get through this stage and you're going to acquire shares from them later on? What's the exit plan?
So I like all of those questions, and I think that those are really important. But those are things you can ask somebody. But how do you actually ascertain, whether they're one? I'm not going to say telling the truth because we're assuming people aren't lying to us. But
Right.
like the stress situation, right? Most people have no idea how stressful it is to run a company, let alone a startup, especially if you don't have funding. And sometimes you don't know if you're cut out for it until you've gone through it once or twice. So, how do you guys gauge that? And how do you help a startup specifically figure out, or the startup founders, I should say, figure out if they're capable of overcoming, those really, really stressful long days?
And it's a good question. And interesting enough, I would say a lot of times investors want to deal with serial entrepreneurs. And even if they had a failure, they always ask what happened. And a lot of times, I think people respect someone who's gone through failure and gone back to a successful path because they know what to look out for. So it's also experience is important, but a lot of times entrepreneurs are young adults, 21, 20, just out of university, college, or just starting right out of high school, and they have a good business idea. So you have to ask the questions, and sometimes they really pinpoint how they can deal with certain stress. So you question them pretty much, well, I don't really agree with your market research. This company's doing this. How will you deal with this problem? So you pretty much play scenarios with them. But at the end of the day, it's kind of, I wouldn't say a gamble. You're trying to minimize your risk in investing because you can invest in anyone. You don't know if it's going to succeed or not. Some people, they've been successful in the past, have exits, and they have a startup and it fails miserably.
Yep. Yeah, I think aptitude testing is really important there, and I like that, challenging their assumptions and challenging them right in front of them because a lot of people, um, especially you think about entrepreneurial minded individuals, they're generally leaders in some capacity, right? And throughout their lives, they're not necessarily used to being questioned, or if they are, they always have an answer for it. And if you all of a sudden start questioning someone and they break down and they're like, no, forget you. I know what I'm talking about. You don't know. And they're not coachable. They're not willing to accept that there might be a different viewpoint or at least have a good discourse on the topic. Then it's very challenging to say, okay, well, I want to give you my money, even though you don't agree with me and you're not willing to listen to me. So I think that coachability and that aptitude is really important for understanding that. Um, one of the things that you said, and I'd say the same thing to people, I call it a UIP. What is your unique investment proposition? In other words, why should an investor invest in you over and above every other option available to them, including just stuffing their money into the mattress, right? And whenever you ask that question, most companies have no idea how to answer it. So how do you help them overcome that situation of, well, why should somebody invest in you? Because a lot of people just point to market trends and problems and things like that. But what are some of the big um, either light bulb moments or ahas or victories you see when it comes to somebody answering that question properly?
Interesting question. And a lot of times I see with investors, they want to know how you came to the idea. If it's a personal idea, you have a passion. So, say if it's in health AI, it's probably due to an unforeseen tragedy, and you're personally motivated to find a solution to a problem. Or in other ways, it could be, oh, I worked in a certain company or dealt with a certain matter and I saw there was a big problem and I wanted to solve it and I saw there was no solution in the market. And that's why I'm doing it. Because if you can relate it to your personal life in some ways, you're even more disciplined and have a vision to come to a solution than saying if you just copy it from someone else and just want to get rich quick, let's just say.
Right. Yeah,
That's one.
and we all know there's no such thing when it comes to a startup, right? There's no such thing as a get rich quick startup that I've ever seen. Even the ones that do somehow manage to magically create capital out of almost nothing, they generally don't last very long, right? A lot of flash in the pan kind of situations. So I agree with that. I think that the story behind understanding the problem, I think is huge. I think a lot of people underestimate that, and they don't want to talk about that. So how do you, or give us an example, like when you're coaxing that out of somebody, right? Somebody comes to you with what seems like a really cool idea, but they don't have any context behind it yet. We want them to get to the context, right? So how do you help them get to that?
So let's just say, if I understood correctly, how do I help them to tell their story about their idea, correct?
Yeah.
So I really drill them to the fact to be like, what makes your idea so unique? And why do you think your solution is better than some competitor? And sometimes they'll be like, oh, I'm going to put it for a cheaper price. Okay. And what? There's going to be someone else that can develop it from, say, Uzbekistan or some other country 2 months later. So, and because today we're in a globalized world. So I said, one thing is you have to make the story so simple that's understandable to anyone who's not even an expert in the industry. Because if you're going to pitch it to investors, you have to understand they can't be an expert in every field and invest in all these companies. And a lot of them are experts. Say if you're dealing with, say, if a VC who's focused on health, they're going to have a background in health, most likely. That's usually the case. Or they have someone who's an expert advisor who's going to be on those calls and meetings to really investigate, is this idea profitable?
Mhm.
So I always say to them, make it so simple that anyone can understand it, but you have to pitch it that you believe it and that you're passionate about it. Because if you say it monotone or if you're pitching it and you get defensive, that's a big issue for a lot of investors. Because a lot of investors I've seen, if they see someone who's defensive, they're like, how the hell is this person going to sell the product if someone doesn't want it?
Right.
Because reputation, if I'm not mistaken, Warren Buffett says it takes 20 years to build a reputation, but it takes only 2 minutes to lose it.
Yeah. Absolutely. No, I love that. I think the passion behind it and helping people feel that, like the energy that you're giving off when you're pitching your idea and you're talking to people about stuff. I think it's necessary because that's the contagion that gets people excited about what you're doing, right? That's how you're going to get these people to stick around and listen because you can have the best idea in the world. Like you said, if you're monotone and boring and you can't get people to stay awake for 30 seconds, then you're never going to get your idea across, right? And man, I've seen people pitch really, really bad ideas, but they have so much enthusiasm behind it that people just gravitate towards it. So I think that's a really important point that people need to understand.
I agree. And one thing I notice with a lot of companies, say sometimes a CEO isn't always a CEO when they're trying to get investments. They become a CTO or a CFO because they don't have the proper communication skills. And I do not think people value communication as much as they should.
Right.
When to listen, when to talk, when to change the tones, for example, to grasp
Right.
the audience's attention. And that's very key. And we see it even with on politics or in entertainment, you might not like the person, but they'll grasp your attention if they're charismatic or if they know how to play the voice tones, and also if they know how to hit the keywords and then pause.
Before continuing, please subscribe and share this video to help us reach more people and stay notified of our latest releases. Now, let's continue watching and learning.
Yeah, absolutely. Storytelling is so important in this space. We say it, I don't know how long this saying's been around, but ideas are a dime a dozen, right? But getting people to believe you and then being able to execute is so important. Now, like we said at the beginning, you're over there in Dubai and you specialize mostly in the European and Middle Eastern markets. And it sounds like even though you're working over there across the pond from us, similar situation, right? We're all humans, and as a result, we all gravitate towards certain ideas and certain people and the way they express things. But are there any differences or nuances that people need to be aware of when they're trying to raise capital or even investing in companies that are not local to them and in their country where they might know the rules, right? Like every country in Europe's different. Every country in the Middle East is a little bit different. And if you're working in this international space, which is what you do, I have to believe that there's not only cultural differences, but definitely legal differences that people need to be aware of, and probably financial risks that they need to be aware of if they're trying to raise money across borders.
No, definitely. I think you have to understand the social cultural factors. That's very important because in some cases, some people might think that I can just be like, "Hey, Jeff, how's it going?" on the first meeting. And in some cultures, you have to be like, "Hello, Mr. Jeff Barnes, how are you doing today?" Like more formal. And also, I think it's important to know what are the main industries of countries that a startup's located, because that's how they connect to a problem too. And that's their history. What's the education system like? Because civil law is different from common law. A lot of European countries are civil law, but in a lot of North American countries are common law. So if they're dealing with legal, we're dealing with a jury in the States or in Canada. But if you talk to someone about that in Italy, they're like, "Oh, or civil law. What's a jury?" The judge makes the decision. So that's
Yeah.
one factor. I will say taxes for sure. For example, Middle East has a lot of favorable tax offerings compared to maybe some European countries. But in Europe, they also have a lot of EU grants. So in some cases, some companies that get a EU grant, they may not be able to leave Europe for a certain time period because they got a grant from the EU. So there's always a lot of factors in. So say if an investor wants to invest in a company that's got an EU grant, they have to understand they can't be a Delaware C Corp for quite a while unless there is some acquisitions and various schemes, legal schemes, obviously. We're talking
Right.
to make sure that it could be a Delaware Corp. And I think uh, one thing that is important about, let's just say, Europe is GDPR. You can't just spam a bunch of people with personal emails with marketing stuff. You have to know the person, they have to acknowledge it, etc. In the States is a lot different. And I think there's a lot of skill sets that varies. For example, I would say let's just say Eastern Europe, they're very good in tech skills, as we know. We always hear about a lot of interesting companies that come from Eastern Europe that went to the States, hence UiPath. The first AI company to go public was established in Romania initially. So there's a lot of interesting things that go on.
Yeah, I'd say that understanding all those nuances is challenging at the very least, right? So what are some things, I'm imagining a lot of places. I know a lot of places in Europe, and I've also been to some in Dubai and Abu Dhabi where investors get a chance to come and sit down and watch presentations from different companies. And like I said, if they're not prepared, not just for raising money, but understanding the culture, I think that's really, really important. So from an investor standpoint, what are some of the things that maybe they need to be willing to, I'm not going to say overlook necessarily, but if somebody's coming from outside your country and pitching you an idea, what are some of the challenges you've seen on the investor side where they're like, "Hey, I might like this idea, but I don't like this guy or this person or this company or whatever." What are some of the challenges you kind of help these investors overcome?
They have to understand how people communicate. So say, for example, in America and UK, it's very fast. Boom, 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 boom. Let's make a business deal. Boom. They already have a feeling if they want to work. And I would say, I hear from a lot of investors globally, they admire America because a lot of people and entrepreneurs are not afraid to fail. Europe is a
Mhm.
bit different, or as they say, the old country for some people, because there's a lot of companies that have been for 300 years. And you look at, if I'm not mistaken, the Fortune 500, I think the average lifespan of a Fortune 500 company to be in that list is like 18 months compared to what it was 20 years ago. And I think investors have to know how to communicate. So I would say in the Middle East, you can't be as demanding as you would with someone from the States. In terms of, okay, why this is this? Can you get this to me ASAP? Because in some ways, they might take themselves slowly because they have to build trust.
Right.
And I think that's some things that an investor has to take into consideration. And also in terms of how they view certain skill sets. For example, I think in America, sales and marketing is very important. Hence, when you look at one of the biggest brands in the world, they came out of the United States. You're going to see all of them. It doesn't matter. You can go in a third world country, you're going to see a lot of global American brands there, from McDonald's, let's just say. And I think that's a perfect example.
Yeah, no, I agree. It's just like understanding cultures, understanding communication styles, and moving at the speed of trust, right? I think that's really important. You can't pressure somebody into making a decision, especially if they don't normally operate that way, right? And it can throw off red flags, right? Even though they don't mean to. Like, no, I really need this information like tomorrow. Well, for you to ask me this right now and to try and speed me up and pressure me, that doesn't really help me want to be doing business with you, right? So understanding those global markets and how things work interculturally, I think is really important. So let's shift gears here a little bit. You've analyzed over 15,000 companies. What are some things that you could talk to maybe somebody who's not a professional investor? They don't have a team of analysts and they're just looking at deals. And it's the first time they're really getting into it. And they're like, hey, I'm really interested in finding an opportunity that'll win. What are some ways that you can help these people navigate, or some, I guess, advice you'd give them to navigating, the financial analysis or navigating the markets to try and find an investment opportunity that they might want to be in that's in the private markets?
Okay. So a lot of times you look at what companies are getting funding, what industries. And a lot of investors sometimes go with the phrase fear of missing out, FOMO, which sometimes isn't that good because everyone is investing in the same thing. There's got to be opportunities you can't be the number one investor. You're not going to get the best startups. If everyone's going there, they're probably going to go with the more established or the ones that's going to give them the best investment terms. And I would always say to investors in terms of market research, because I'll start with that first, look at the transactions, look at the exits in the market. Say if you invested, in this company, is there another company that offers a similar service? Are they doing well or not? Is there a gap in the market? Okay. Is there any exits in this market? If there isn't, why not? Maybe it's really early innovation in the industry. That could be a possibility. Or this industry hasn't yet been developed fully. Because if you look at sustainability, it wasn't that popular 30 years ago. But it has been in the past, I would say, good 15 years. Slowly, but it has. Now it's a real hot topic. It's pretty much its own industry now. And another thing I would say is, say if you invest in this company, let's just say they deal with voice tech and dealing with customer service. Is there any companies that have been acquired? Yes. Who acquired that company? Who are their competitors? Do their competitors have this product or service that this potential portfolio company that you want to invest in has? If not, develop a relationship with them. Try to minimize your risk. And also, when looking specifically into companies, I would also say, is it really making noise in the market? Or is it just copying a few other companies, what they're doing, just doing a different pricing model? because that's really risky too. Because I would say customers have to trust the product or service that they're buying. And it was interesting. I had a meeting earlier today, and it was a very successful individual in the healthcare industry. And they said, for me, the number one thing is trust when working with someone or buying a product or service. That's very important, and building relationships. And as for financial analysis, I always I always say, if you're going to invest in someone, look at how they think about money. Look at what they want to spend on it. If you're giving them, so let's just say 100K, I'm just sorry, is it all just going to go into salaries? Are they going to really develop a team? Is it going to go R&D, marketing? Have they looked at all the marketing tools? Do they have the right mindset or skill set to use that funding for these certain aspects to grow their company? And I've looked at a lot of financials from companies, and if I see that there are, let's just say, misrepresenting some expenses, to me, that's a deal breaker. Or if they're
Yeah, I
saying,
mean, being able to understand their financial statements and, like you said, misrepresenting their finances, that's a big one, right? You got to make sure that people know what they're spending their money on and how to be stewards of the capital you're giving them. I think that's really important.
definitely, or if they're, let's just say, not properly doing the accounting. Let's just say they're claiming one thing is an expense and it's not, it's a personal expense. That's a big deal breaker, in my opinion, because what are they going to, how are they going to do with your monies when you give them? And let's be realistic. Is this financial evaluation really appropriate? Is it valid based on this information? Because if someone doesn't know their finances and they're going to operate a company, maybe they should hire a CFO or someone, a part-time finance manager, or outsource that information. And sometimes I have seen investors, they will get someone from their own fund or advisor to help this company with the finances. You might be like, you know what? This person isn't a financial expert and doesn't have the right financial knowledge. Let's use someone in our network to help build this company properly, who can help them manage the finances that we can trust. And I would say you have to look at a solution for any problems that you might see in investing in a certain company.
Right. Yeah, I think that's really important, and asking the mentors and the advisors. And like you said, if there's a fund that's putting money in, or early stage investor that knows what they're doing, make the recommendation to find the right person to fill that seat. I think that's really powerful and important. So, Daniel, we're running low on time here, but I wanted to ask you one really important question, and that is, now that you've analyzed over 15,000 companies, you've been an entrepreneur, you've traveled around the world, you've moved from your home country to Croatia, now you're in Dubai, and you're traveling all over and looking at these different deals. If you can go back to, let's just say, your younger self, before you actually got into this world, and give yourself one piece of advice, what would that be?
I would say try your best and don't be afraid of failing. Because I think you have to be somewhat vulnerable if you want to be successful. In terms of, I wouldn't say vulnerable and say, oh, what are all your problems, but vulnerable in terms of getting out there. Contact every person you think that could be useful. What's the worst that can happen? They say no. At least you don't have the regret. At least you tried. Why not go to a certain conference and see if you can talk to a successful entrepreneur and pick their brain about something that's important to you? Obviously, don't waste your time with something that isn't really relevant, like, oh, what's your favorite color or book, but something that will really help you grow. Because sometimes those chances, you miss out on them. And later on, you can be like, oh, only if I took advantage of that opportunity.
Yeah, absolutely. So I have to ask then, follow-on question to that. Were you kind of introverted or shy when you were younger?
I think I was a bit too self-critical of myself
Yeah.
in terms of, and I say, like, I wish I did more personal branding and learned more about marketing in the beginning of my career. Probably used them once I started my career. I think that's very important. And I think, for example, in today's world of technology, it's huge, hence LinkedIn.
Yeah, I couldn't agree more on that one because, we live in a very noisy, busy world, right? And standing out amongst the crowd of all the people that are puffing their chest out and talking how great they are, it's challenging, right? And if you are, like you say, self-critical, then that's even more challenging because you're looking for everything to be perfect, right? And we say that perfect is the enemy of progress. So being perfect is not really what you want. In fact, what I found out is some of the most boring, mundane, dumb things that I've ever done publicly or on social media or at an event is the stuff that people relate to the most. And I don't understand why necessarily. You'll never know really why exactly. You can go back and analyze things and maybe just landed just right to the right people. But yeah, being too critical of yourself and trying to wait for everything to be perfect before you actually put yourself out there, or like you said, go to the event or introduce yourself to somebody that may or may not want to have anything to do with you, but could be beneficial for you in the long run. Got to put yourself out there. I agree with that 100%. Awesome. So, Daniel, we're wrapping up our show here. How do people find out more about you and maybe contact you if they're interested in learning more about how to analyze investments or get due diligence done on their companies and so on?
Yeah, they could check me out on LinkedIn, or they can go on my personal website, danielnikic.com. Pretty simple.
Perfect. All right. Well, you have been listening to the Angels, Exits, and Acquisitions podcast. I'm your host Jeff Barnes, and this is Daniel Nikic. We've just finished up our episode here. So I want to say thanks for watching this. Thanks for listening to this. Make sure you check out the show notes. We'll have all the links for Daniel's bio and website in the show notes. And Daniel, thanks again so much for being here today.
Thanks for having me, Jeff.